All right, good morning, everyone. Give me a quick sound check here. And we got the futures moving lower post CPI report. A little bit of red. You got the S&P futures down 1.3. The IWM futures down almost 3%. They're spanking the small caps. QQQ futures down about 1.2, and the YM down about 1. So a little bit of selling here this morning. Now, the biggest thing I had coming into today, I got the squeeze labels here on the QQQ. You know, one thing's for sure. The QQQ is fixing to make a big move. We have a 3-day squeeze, a 2-day squeeze, a daily, a 4-hour, a 2-hour, a 1-hour, a 30, and a 15-minute. It's a lot of compression, right? A lot of built up energy. And I'd imagine this morning with the gap down, that 15-minute, the 30-minute, maybe even the 1-hour and the 2-hour, they're probably going to fire short. And anytime you've got a big nested squeeze, right, one squeeze on top of the other, on top of the other, and right now we've got 8 of them. And frankly, not too often do you have that many squeezes all setting up at once. When you've got that many, you can get that domino effect. 15-minute squeeze fires short. That can trigger the 30-minute squeeze to fire short. Then the 1-hour, then the 2-hour, then the 4-hour, and then the big boys there on time frames. So as far as key levels for today, for the QQQ itself, the daily 50 SMA, 436, 437-ish. It's going to be a really important level. 1 or 2 closes back under that 50. All right, not a guarantee, not a promise, but probabilities wise, 1 or 2 closes back under the 50. Much, much, much better chance that daily squeeze breaks short. Now, for context, and we talked about this, I think, on Monday. If you look at the weekly chart's beautiful. All right, perfect weekly chart. The structure is bullish. It's a really good looking trend. We got the weekly buy signal. And the big 3 score is perfect. It's a 12 out of 12. The only quote-unquote issue, we haven't been back to the weekly 21 EMA since November. Which in most regards, that's one heck of a push. The typical weekly squeeze, once it fires, you're looking for about 6 to 8 to 10 bars of momentum. This weekly squeeze was definitely a bit of an overachiever. Took you through December, took us through January, February, March, and now here we are in April. And then for the NQ, QQQ futures, same thing. It's a great looking weekly chart. So again, I say that for context. From here, the NQ could pull back another $500 or $600. I don't think the end of the world. If that's a 15-minute time frame or a 30-minute time frame, I don't think a pullback to the rising 21 EMA is really all that bad. Sets up better buying opportunities. You're getting better risk rewards. But yeah, for sure, being that it's a weekly chart, it could be a pretty good pullback. So then flipping here to the daily time frame. And what do we got for a big 3 score? 3 out of 12. Which it slightly leans bullish. But if we're trying to call for that immediate continuation higher, we're looking for a 10 out of 12 or a perfect 12 out of 12. And like we talked about last week, the problem has been momentum. The structure of the chart has been good. It's got a good foundation. 21 EMA above the 50 SMA, 50 SMA above that 200 SMA. We don't have a structure problem. We have a momentum problem. Down here on the big 3 squeeze, we had a negative momentum cross back in late February. And really, ever since that negative cross, the bulls haven't gotten a fresh tank of gas. They can get a fresh tank of gas if they take momentum back above 0 and keep on pumping it higher. They haven't been able to do that. They tried taking it higher, back down. They tried taking it higher, back down. All right, they try again. They're getting close, but no cigar. And now you're getting a really big momentum break. So those two variables, structure and momentum, you put momentum first. In the case of an uptrend, if you lose momentum and you can't get momentum back on the side of the bulls, then you're liable to lose your structure. One or two closes back under that daily 50. Then we're getting much closer to a point where we're going to lose that structure. So the key level for the Qs will be your daily 50 SMA. And then checking out the S&Ps here. The spiders, it's the same thing. Down goes momentum. Down goes momentum. You get that big negative cross. And even though the structure is pretty good, if they can't turn momentum back up towards that zero line, then we're liable to lose our structure. And for squeezes here on the SPX, we have a daily, a 4-hour, a 2-hour, and a 1-hour. Pretty big combination from that domino effect kind of point of view. 1-hour squeeze fires, then comes a 2-hour. 2-hour squeeze fires, then you got that 4-hour. With the big boy being that brand new daily squeeze. Now, the context here is the same. It's a beautiful weekly chart. All that implies is tomorrow, the SPX could gap down about $200. Nothing's really changed. We're in a weekly uptrend. We've got really, really good weekly structure. We got a weekly buy signal. My thinking would be, all right, if we're on the verge of a bigger pullback, back into that weekly 21 EMA, I'm not going to blindly buy it down there. But my first thought would be, okay, that should be support. I'm going to see if support can hold up. And I'm probably going to look for a trigger to buy it. With patience, of course. And then S&P futures, right? The cash and the futures. Let's see, the futures. We got a daily squeeze and a 4-hour. We got that fresh momentum cross. And the big 3 score drops down to a 3 out of 12. Now, the 4-hour squeeze here, that's probably going to be the one to watch today. And she ain't too pretty. Momentum break, sell signal, structure flips bearish. Under the 50, under the 21. We're taking out that 200. And we've got a big 3 score of -8. Anytime we have a squeeze and a score of -8, I can't look for a long. Until they can improve that score, the only thing I can think is there's a better chance they're taking that short. And then let me show you the small caps here. The IWM futures. It's a little bit nasty. It's a pretty ugly daily candle. Momentum break. Big 3 score drops to a -1. Squeezes on the weekly, the 3-day, the 2-day, the daily, and the 4-hour. So without trying to speculate too much where we go from here, most important thing you all got to keep in mind, myself included, when you lose the wind at your back, meaning the S&Ps, the QQQ, the Dow, they're no longer trending higher. All of a sudden, the really good-looking setups, the same setups that work really, really good, when you've got that wind at your back, they no longer work. A few of them might work, but as far as the probabilities game, it gets a lot more difficult. So my rule would be, I've got QQQ and the SPX closing below their daily 21 EMA. I've got to hold off on looking for fresh longs. No matter how good the setup, right? No matter the structure, the buy signals, the squeezes, the indices closing below their daily 21 EMA, I think the first indication I've no longer got that wind at my back. And with that being said, there's some good looking setups out there. One of them is Google. Now, fortunately, we took off our Google yesterday. We had a little pullback here last Thursday. So we jumped in and bought the 160 calls for the week of earnings. And then we're sitting here yesterday. We caught a little gap up, caught a push into about 159. And I figured, not a bad spot to take the easy money. We're bumping into that daily 3 ATR, which I think is a general statement. It's a good spot to take profits. And then you've got the CPI report. We got the PPI tomorrow. We got Fed speakers. Didn't quite feel like a good spot to be greedy. But the point I'm trying to make, if you check out the weekly chart here for Google, rock solid. Really, really good quality weekly squeeze. It just fired long this week. Structure is bullish. It's above the trailing stop. Perfect 12 out of 12. With a little bit of wind at its back. In most situations, Google's got a clear path here for about 165, 170. With that wind at your back, I think that's a really high probability trade. And in my experience, it's a really high probability trade. You lose that wind at your back, S&P's going lower, QQQ going lower. Doesn't matter how good Google looks. The idea of Google going towards 170 from here, it gets tricky. Right? I really think the odds begin to shift against you. You've got names out there like Amazon. Amazon just fired a daily squeeze. It's got a perfect 12. It just fired a 2-day squeeze. Again, with the wind at your back, Amazon looks poised for a push into about 190. The market going the opposite direction makes the idea of getting that push into 190 on Amazon, I think, really difficult. You've got Meta. I've heard of her, but I've never met her. Good looking 2-day squeeze, right? Not too bad. Pretty good looking daily squeeze. Down goes the market. I don't think that trade idea works. As goes the market, goes the stocks. There was a nice looking squeeze here in Netflix. Again, no market behind it. I can't go buying that daily squeeze. And then I think the semiconductors are pretty interesting. There's a few that look really good. The first one that comes to mind would be Qualcomm. Qualcomm's rock solid. Big 3 buy signal on the 4-hour chart all the way down to the 5. 15-minute in a daily squeeze. You get a good market behind it. Qualcomm can boogie into about 180. So yesterday, I think Qualcomm is one of the better looking setups out there. Now look what's going to happen this morning. Gapping down about $3 or $4 into 171. Is it a good setup? It is. Does the market currently support the idea of that going higher? No, it does not. And then AMD has been a bit rough. And it's going to get a little bit rougher around the edges this morning. Big 3 score of -6. The first daily sell signal all year long with a 15-minute, 30-minute, 1-hour squeeze. That's going to gap down about $4 or $5. And then the king of the hill, NVIDIA. NVIDIA set the gap down about $13. So I'm not advocating that you wake up this morning and you buy puts on everything. But I want you all to think in terms of the numbers game. At the end of the day, that's all trading is. It's just a big, big numbers game. Continuing to buy calls. right? Continuing to do the debit spreads, continuing to try to trade the good-looking setups. And again, there's a lot of them. A lot of good-looking setups. If you continue to do that, while the QQQ and the S&Ps go lower, right, assuming things don't bounce from here and fix all the problems, the risk that you run, and believe me, I've seen this hundreds of times, and I've done it to myself before. You keep on forcing the issue to the buy side. The QQQ does pull back to a weekly 21 EMA. You run the risk of giving back a lot of or all of your profits that you made on the way up. Alrighty, so I think a spot for patience, and keep it simple. Right. 1 or 2 closes back under that daily 21 EMA. We're looking for more shorts. Shorting a bounce into a 21 EMA, getting short in a 15-minute or an hourly squeeze. And then in the event we close back under the daily 50, then I think we're on the verge of a bigger pullback. So today, tomorrow, Friday, shall not be dull. And for the folks in my mastery, right, like I said, we took off our Google yesterday for a nice profit. And the only open trade we have in the mastery is crude oil. Now, crude oil here could be a bit of an exception to the rule. I don't think crude oil cares so much if the S&Ps are going lower, the QQQ is going lower. In most situations, crude oil is kind of going to do its own thing. So with that being said, I continue to like our trade there. We got that weekly squeeze that just fired long last week. And we're looking for a push into about 90 bucks. No problems here with crude. But all right, y'all, any questions, anything you want to take a look at, throw it on at me. But as a good rule of thumb, and this applies for me as well, of course, right? I say this as a friend. I say this with love. My stock picks, your stock picks, they probably don't matter right now. We can crank up the scan. We can find a really, really bullish idea. I don't think it matters. If the indices can't rebound, I don't think it's going to work. So what I'm going to scan for today, and we'll see if the scan works here pre-market, I'm a bit more open-minded to bear squeezes. Not a squeeze to get long, but a squeeze to get short. And again, I'm not going to jump in here at the open and go crazy. But if for the next, the next week, next couple of weeks, if the path of least resistance is back to the downside, that's going to be my plate of opportunity. Shorting the indices or shorting stocks in a bear squeeze. Right. Good example would be Apple. Right. That's a good looking short. Squeeze, sell signal. Structure's bearish. Negative 12 on the big 3 score. You've got T-Mobile. Squeeze, sell signal, bearish structure. Shopify, Workday, Pinterest. We'll see what the scans have to offer today. All right, we take a quick look here at the futures. Yeah, we are right up on that daily 50. That 'tis where the rubber meets the road. Sell signals on the 4-hour, 1-hour, 30-minute, 15-minute, and the 5-minute. So for the NQ here, the first thing to watch, mark up your daily 50, and then this 4-hour squeeze here. That'd be the one to watch. Yeah, 18,000 is a big spot. Right up on last week's lows. But okay, guys, I'm going to get caught up in the chat, and I'll see what you got. Hey, what's up, Shay? Good morning. VRTX and Workday for shorts. Yeah, I think I saw Workday on the scans. Mm-hmm. So what makes for a good short? All right, a little trick for you guys and gals. A good-looking short, if you put it on the inverse chart. So for Workday, if we put in the minus symbol, all right, in the ticker column, minus Workday, that'll flip the current chart upside down. So on the inverse chart, yeah, that's a good-looking long. It's above the trailing stop. The structure is bullish. It's got a big squeeze. It's got a buy signal. It's got a positive 6 out of 12. If the inverse chart sets up for a good long, then the real deal, the real McCoy, sets up for a good short. A great example, one of the cleaner shorts I've seen as of late, Starbucks. And my wife spends a lot of money at Starbucks, so I kind of wish I shorted it. But check out Starbucks on the inverse chart. Minus Starbucks. Beautiful long. Good structure, buy signal, squeeze. So the real chart, it's just the opposite. Squeeze under the 21 EMA. Big 3 sell signal. Structure label is red. The trailing stop label is red. And you got a pretty crappy big 3 score. Crappy meaning really good for a short. And then VRTX. Yeah, that's another one. Yep. Good eye, my friend. Good eye. Raj. So Tesla's been in rough shape. Gonna gap down about $3 this morning. I think there's a few cleaner shorts out there. But keeping things pretty simple, we've got the 21 EMA under the 50. The 50 is trending lower. The 21 is trending lower. We're below that trailing stop. We've got a big 3 score and -5. Does that guarantee Tesla goes lower? Of course not. But it does point towards probabilities wise. It'd be a bit easier for that daily squeeze to fire short than for that daily squeeze to fire long. I think the pattern's pretty similar to back here. They rally it back into the falling 21 EMA. They get that positive momentum cross. Down goes momentum. Down goes the squeeze. But frankly, guys, it's not going to be about Tesla. It's not going to be about Tesla. It's not going to be about Amazon or Google or Meta or Netflix or Microsoft. It's not going to be about Nvidia. What it's going to be about is Mama and Papa Market. QQQ SPX. That's Mama Duck. Wherever Mama Duck goes, the ducklings, right? The ducklings at the stocks, they're going to follow behind in an orderly fashion, which would imply at this point, before I can buy a Tesla, before I can buy some more Google or whatever the case may be, I've got to get the thumbs up from the indices first. When the indices are screaming at me, hey, we found a bottom, we're turning the corner, we're ready to keep trending higher. Okay, cool. Now I'm looking at Microsoft, now I'm looking at Tesla, Amazon, etc. But not until then. Not until then. Hey, good morning, Esmore. I appreciate it. Good morning, Amir. Good morning, Terry. Good to see y'all. Got ourselves an interesting Wednesday morning. And I've got pancake breakfast at my grandma's this morning, so I'm not too sure what I'm going to come home to after pancake breakfast. I'll probably be checking the quotes a little bit under the table. Etsy, what's up, JR? Etsy. So Etsy. It looks like Etsy's going to gap down to about 66 and change. Right, which down there at 66, it'd be an easier short. Below the 200, below the 50, below that 21 EMA, -7 on the big three score, and then check out the bigger time frame squeezes. 2-day squeeze sets up for a short. The 3-day squeeze also setting up for a short. So I think a gap down today, like most things out there, a gap down today would make it a bit easier to see those bigger 2-day, 3-day squeezes. Want to get that party going to the downside. Yeah, Shay, let's go check out Microsoft. Now again, Microsoft looks really good. 15-minute, 30-minute, 1 hour, 2 hour, 4 hour, daily, 2-day, 3-day squeeze. Into the close yesterday, it's all looking pretty good here. Now we're going to get about a $4 or $5 gap down to 421-ish. As goes the market, goes the stocks. Crude oil being the exception. I hope. All right, Peter, what's up, Peter? Good to see you. AEP. So there's a great example. And keep in mind, guys, as we have these discussions, we're really thinking more in terms of probabilities, as opposed to a case-by-case example. For all I know, AEP breaks out, rallies into 88 bucks, and you're looking back there at that daily squeeze thinking, man, what a good trade. What a good setup and what a good move. At the close yesterday, it's beautiful. Weekly buy signal, a daily buy signal, a 2-hour, a 30-minute, a 15-minute, and a 5-minute buy signal. It's got some great squeeze action, a 2-hour, a daily, a 2-day, and a weekly. The bigger question today would be, can AEP buck the trend? S&P is going lower, QQQ going lower. Can AEP muster up the strength to buck that trend? And hey, it definitely could, right? It definitely could. We're going to continue to see certain stocks outperform the market and go higher. If we're thinking in terms of a probabilities game, again, it just gets a lot more tricky. This kind of setup, with all that wind at your back from the QQQ, all that wind at your back from the S&Ps, not every time, but a lot of times, that tends to make for a pretty nice trade. You're not sitting through a pullback. You're not sitting through a drawdown. Usually going to be a bit more easy peasy. And for those of y'all in my mastery, we've seen that reflection over the last week or so. This tends to be the case. When the market was moving higher, we took a trade in Bank of America. Easy trade. No big headaches. We're buying it and off it goes. We had a trade in Microsoft. Nice and easy. We're buying it back here. 2 days later, we're flipping that out for a nice profit. We had a great trade in Best Buy. Bought it on Thursday. We're taking profits on Friday. Good setups, but most importantly, the S&P and the QQQ were giving you the thumbs up. They had no sell signals. They weren't breaking structure. There wasn't momentum problems. The market basically said, hey, go for it. Then we're taking a trade a couple of weeks ago in the square. Now, the setup here in Square, same exact setup as Bank of America. Right. Same thing as Best Buy. Same thing as Microsoft. We got a different result. We bought it back here, and then we're taking off that trade for a loss on the break of that 21 EMA. What happened? We had a little break in the market. Right. Same thing happened in Crowd, which means our Google trade was a little bit of the exception to the rule. We bought the pullback. The market didn't necessarily rally higher, but thankfully for us, Google still did its job. I don't want to bank on that continuing to work. It's a tough game to play. Tough game to play indeed. All right, little bounce coming through here at that daily 50, which I think you would expect. They should try to hold it here first. But if they want to get out of harm's way, they got to hold that daily 50. They got to rally it back to the 21 EMA. Then we got to get a couple closes back above that 21. If they can do that, then we can avoid a much bigger flush. But until proven wrong, the signals are not the greatest. We got a lot of red up here. A little bit of blood in the streets this morning. Yeah, David, that's the spot, my friend. A lot of support there. Daily 50, recent lows, the ATR trailing stop, which I would expect they're going to try to bounce it. Then the question would become, okay, can the bounce fix anything? Does the bounce cancel out the 5-minute sell signal? Does it cancel out the 15-minute, 30-minute, 1-hour, 4-hour sell signal? Or is it a bit more of a dead cat bounce, as they would say? We'll find out. That's the fun part, guys. We'll find out. All in time. All in due time. Oh, the root canal. The root canal was easy work. Yeah, man, I didn't feel a thing. I got a good dentist, I guess. Even the needle for the numbing, I didn't even feel that. So I got there at 1 o'clock, and I was back on the road heading home around 2 o'clock. And I've got no pain this morning. Yeah, not a big deal. Like most things out there, it's a bigger deal in your own head. I could do another one today. Yeah, David, that's what I would look for. That is what I would look for. So for those of you that have the big 3 indicator, it's a process of elimination. If they're going to find a bottom, if they're going to find meaningful support, stabilize the market, and then begin taking it higher, they've got to work through all these lower time frame sell signals. So the first piece of that process would be, all right, can they get rid of that 5-minute sell signal? And then better yet, can we get a fresh 5-minute buy signal? Now, a 5-minute buy signal fixes nothing in the grand scheme of things. But before the bulls can take back the 15-minute, before they can take back the 30-minute and the 1 hour, they've got to take back quote unquote ownership of the 5-minute. And that's where it gets a little tricky. The NQ could rally all the way into 18,200. we're still going to have a 5-minute sell signal. The bigger the drop, the quicker the structure breaks. Therefore, the more difficult it's going to be for the bulls to quickly fix that structure. So, for example, how can we get a 5-minute buy signal? We've got to get price back above the 21 and the 50. Well, hey, if we're getting back above the 50, then that would imply we're going to rally $200 here. They also got to get the 21 back above the 50. They got to turn that momentum or turn that moving average, get that positive cross, and they got to get momentum back above 0. That sudden $400 or $500 drop really, really breaks the structure, making it that much more difficult for the bulls to quickly come in here and get a fresh buy signal. So I think for the bulls, the best case scenario today, if they can just keep it stabilized above that daily 50. Stabilize it, stop the bleeding, try to hold things up with support. Then later today, tomorrow, Friday, they can try to chip away at some of that progress. Will not be dull, guys. Will not be dull. Groovy Jeff, the CPI report came out at 8:30 Eastern, 7:30 Central. So in an hour before the cash open. So we got that news about 50 minutes ago or so. And then yeah, before we wrap it up here, let's take a look at the economic calendar. If you thought the CPI report was fun, there's more. There is more coming your way. Yeah, today ain't over, guys. Today ain't over. Let's see. Wholesale inventories, 10 o'clock. Chicago Fed President, 12:45. And then the big one later this afternoon, the Fed minutes for March. 2 o'clock Central. Or I'm sorry, 2 o'clock Eastern, 1 o'clock Central. So that'll be big, I'd imagine. And then tomorrow, we have the jobless claims at 8:30 Eastern. The PPI report at 8:30 Eastern. And then my computer froze. Bear with me here. Come on, computer. My computer can't handle all the action. Too much selling. All right, I'll look at my phone. Let me see. So tomorrow, jobless claims, the PPI report, and then Fed speakers pretty much all day long. And then Friday, couple more reports on Friday. And then a few more Fed speakers here. Come on, computer. What is going on? Can you guys still hear me? Did I lose you? We should be good. But yeah, if you want to know why over the last week or so, the game has kind of changed. Right? It's no longer as easy as, all right, I'm going to wake up, I'm going to go buy a call, I'm going to hit the beach, I'm going to come back home and make money. Volatility woke up. Volatility wakes up, the game can change. But all right, folks, I'm going to let you go here. I'm going to reboot my computer, get everything back in order here before the cash open. But again, the biggest takeaway I hope from this morning's session has been, if you lose that wind at your back, buying those calls, selling those put credit spreads, it gets a bit more difficult. I'm not saying wake up and short the thing, but I think a little bit of patience and a little bit of caution is warranted. So as always, thank you for your time. I wish you all the best of luck today, and I'll talk to you soon. Adios.